When you see something like this in the price data for a financial asset, it kind of makes you like go, hey, there's some physics involved here, which you don't really see in any other financial asset. In fact, if you have something like a 0.3 or 0.4, it's considered a good strong correlation. So we're looking at a 0.96, 0.97. When I see 0.1, 0.01, you can retire on this amount, it seems to be backed by more a hope for what could potentially occur in the future, not so much driven by the data.
We are about to approach Q4. This is supposed to be blow off top season. What do you see coming for the next 3 months as we close out 2025?
The way that I believe the tops are most accurately modeled based on the last 4 cycles is an exponential decay of the tops. Let's just say it happens in December of this year. I believe that we get into the 200 realms. Now, it might actually happen in early 2026, and if that happens, I think the potential there is to get closer into the, and I think this is pretty conservative.
Hello, everyone, and welcome back to the Bitcoin News channel. I'm your host, Rob Wallace, and today I am very glad to be joined by Sminston, Bitcoin researcher with a materials science PhD. Sminston, how are you doing today?
Doing wonderful, Rob. Thank you for having me here.
Absolutely. I've seen your work really blow up over the last year. You're part of the power law crew, but you've defined your own niches within Bitcoin, particularly the retirement guide, of course. And we will dive into that with some great charts that you have prepared today. But before we get into that, I would like to kick it off with one question to really open the can of worms. And that would be, why does the meme retire on 0.1 Bitcoin frustrate you so much?
I think that's a great question. And I don't, it doesn't live rent free in my head, but I will admit when it appears in my feed, I think my contention with that is that it seems to be a bit of a, I don't want to use the term lazy claim, but it seems to be backed by more a hope for what could potentially occur in the future, not so much driven by the data. And I feel that if you're going to be talking about, and retirement's a pretty important topic for a lot of people. So if you're actually talking about like responsible retirement planning, and FYI, I'm not a financial or retirement advisor or planner, so don't get me the wrong way. But from my perspective, like with my family and for myself, things really should be driven by the data, even if things don't the outcome isn't exactly what you had predicted. I think this is a similar approach as to what is done in the financial industry when they're doing retirement planning. It should be backed by the data. And I think when I see 0.1, 0.01, you can retire on this amount, it's just not, it's driven by an asymmetric mega leap in what the price could potentially do over maybe like a 2 to 5 year time scale. And they're basically saying you don't have to worry about it. That's the other frustrating thing about it, is that I feel like that sentiment gives people a disincentive to keep working hard and stacking more, where I think it's always a good thing to try to accumulate a bigger stack. So. Yeah,
absolutely. You got to try to accumulate as much Bitcoin as you can. We are in that gold rush era, as Michael Saylor pointed out last year. We've got companies coming in, of course, stacking Bitcoin, ETFs, sovereign wealth funds. Everybody wants a piece of this 21 million Bitcoin pie. And so you really got to go and stake your claim. So before we get into the charts and everything, let's go into your background a bit. You have a PhD in materials science, and you've spent a decade in battery tech. So as an engineer, how did this color your investigation into Bitcoin when you first found it? And how do you analyze through that lens today?
Oh, yeah. Well, having that background, I would say, definitely pulled me into a deeper level fascination for the asset from a data analysis perspective. So I can say that I had, as many other people do, I think multiple clicking points. The more they start to look into and research Bitcoin, certain aspects of the asset resonate with them in a way that pulls them in deeper. And it gets you to kind of learn more. So one of those clicking points for me was just actually the power law, which we're probably going to end up talking more about. But I realized that the structure of the data, the price data for Bitcoin, was something that was uniquely, dare I say, predictable, especially when you do back testing of this model. Although it only had a 15-year lifespan, it was something that formed an unusually straight line, kind of the line that you can't unsee. And I think it for me, because over my 10 years of battery development and data analysis, I've done reliability work. So it really got me curious about, how straight that line was. I started putting some hypotheses together and asking myself, well, how quote unquote reliable is this really? Like, how likely is this thing to fail? How likely is this thing to continue on the trend that it's on? Et cetera, et cetera. Whereas other markets, like in equities and things like that, I think traditionally a lot of people kind of go off of, the wisdom is that it's all kind of sentiment, right? It's all driven by sort of human behavior. So yeah, I really saw that line. And from my data analysis perspective, my engineering background, I said, this seems like it's got some sort of physical underpinnings to it, which are really interesting. So yeah. And I wish I would have known more about it when I was actually in school.
Yes. Well, it's interesting that some of the people with the most unique takes on Bitcoin are engineers, right? Lynn Alden has an engineering background, Saylor, of course, you, and you're able to explain this phenomenon, which is Bitcoin, in a completely different way out of the monetary aspect or philosophical. So just staying on this point, I heard you say that you are more of a hardware guy than a software guy. And so you looked at it from that perspective. And of course, Bitcoin has the hardware, it has the mining, large energy infrastructure. Just for people who aren't so technical, how would you define the two kinds of people, hardware people and software, when it comes to being technical?
Oh, wow. That's a good question. Depending on how I answer, I might make certain people angry. But I'm just going to say, I think people who have been in hardware development are more. Just because you're in hardware doesn't necessarily mean that you're not software savvy. I've just never been the most software savvy type of person. But hardware, meaning like batteries are hardware, right? Batteries are physical devices which store energy. They can be charged, and then later that energy can be discharged and used to do work. I think that they're, from a hardware sort of perspective, that I think about physical things a lot, and physical instruments and machines. I saw the underpinning mechanism of mining and network growth, for example, nodes, Metcalfe's law. These are the sorts of principles that made sense to me. And especially, I have to admit, early on, I was fascinated by the work by Giovanni Santostasi, who was the first, I believe, to discover the power law in price and time. I guess those are sort of the connections I was forming as more of a hardware guy, whereas more of maybe a software engineer, which I am not, might be looking at this from a completely different perspective and saying, they're looking into the protocol, they're looking into some of the updates. They might be more invested in this conversation right now around knots versus core, which, I'm paying attention to, but I'm not as deeply invested in. I'm more fascinated by this being driven by physics. So my extent and practical knowledge of software usually goes towards developing these charts and maybe some websites at some point. So.
Nice. And so let's define money. What is your definition of money for the audience?
I think, that's a good question. I probably should have been more prepared for that. But money, I think, is what a society uses and agrees on some unit of account to be able to exchange value with each other, with other people in that society. So, of course, you have to have some properties in there that incentivize the populace to be able to use that as a money. Interconvertibility, there's fungibility, or fungibility. There needs to be something that's not easy to, manufacture yourself or manipulate or counterfeit. There needs to be something that actually does have store value properties, even if it's not a strong store value. It needs to have some store value because you're going to be trading that with others for ostensibly other assets and things like that. So at the end of the day, money is an idea that people agree on that is good at doing some of those different properties that allow you to exchange value. So we have to have some, and therefore it needs to be, basically be a unit of account, store value, medium of exchange, and something that everybody can kind of participate in as an idea and institution.
Yeah, that's the funny thing about money, right? Is that it's the properties that define it rather than the actual thing itself. And
That's
so
right.
I set that up as a precursor to this question, which is you are an engineer, you focus in batteries, and Bitcoin is all about digital scarcity and energy perseverance, right? Saving the energy, not letting it leak out. Saylor talks about this a lot. So I was just wondering, from your battery background, do you have any analogies that you could use towards Bitcoin?
Yeah, I actually love, unfortunately I didn't put this in my slides, but probably like a couple months ago, I started converting one of my oscillator charts into a battery chart. So, and it was sort of hit or miss depending on, some people analogize batteries really well naturally, and other people are kind of like, what is a battery? So like, but intuitively, some people are kind of resonating with it. I think the analogy there is intended to be like, when Bitcoin is following its power law, there's accumulation, right? So there's kind of an accumulation of energy or charge over time as the network grows. And then when the value really starts to spike, right, and there's a lot of hype around it, and maybe there's a lot of liquidity flooding into the system, and we kind of go through these cycles of booms, you're kind of experiencing a large discharge of that potential energy. So this is the analogy I was trying to work into my charts, which I think is kind of fun. So when you start to climb up towards the price peaks, which we may or may not be doing soon here, you're essentially discharging the battery which is discharging all the accumulated energy that we've been charging up over the past few years.
Interesting. That's a great way.
Interesting way to look at it.
Yeah. And a lot of this work that you're doing is based off of the power law. So let's give an easy breakdown of what the power law is and where do you see it in nature?
So the power law is a very simple and elegant model, but it's based on an equation that's not an exponential, although it has an exponent, and I think that's where people get tripped up. So there's I guess the growth rate is defined by that exponent, but it's not a fixed rate the way that an exponential is. So the fundamental equation is set up as something like y equals, so y being price, equals a, some coefficient, times x, which is time, to the b power. So b is the exponent, so it's to the power of b. And it turns out that for Bitcoin, since its creation, since Genesis in January 2009, it's been following very steadily a power of time to the power of close to 6. So usually when I'm looking at the median or the average, something more like 5.8. But it's been extremely consistent for many years now, almost 10 years. It's been almost exactly that exponent. And the confidence level, or I guess in math terms, it'd be the coefficient of correlation, is that R squared that some people may see sometimes on these charts, is extremely high. So it's about 96% or 0.96. And I have another chart on my page, which also I didn't put in the slide deck, but it shows that over time that R squared is actually strengthening. It's going up. So by the end of this year, it's going to be over 97. And so that's basically what the power law is in its mathematical essence. And the reason that it's so important to observe such a significant observation in Bitcoin is that it's highly explainable by one of the simplest models out there. And this is why you hear Giovanni talk about it in the world of physics. It describes things like, inverse square laws, with light propagation, and even in electrochemistry and electronics and things like that, you see a lot of equations that have power laws built into them naturally, right? So the way that electricity travels and behaves in electrochemical systems, you find power laws everywhere, just in nature. So when you see something like this in the price data for a financial asset, it kind of makes you like go, hey, it kind of makes you sit up and go, there's some physics involved here, So which you don't really see in any other financial asset.
So we can hop into the charts shortly, but could you give us some examples of just how rare that R squared of 96, 97% is? Like anything else in nature we can compare that to?
In nature, there are, definitely very predictable systems, I think, that have high R squareds. Now, in social phenomenon, which people typically think of, like in equities, stocks, and things like that, there's a strong social component. That is beyond an R squared that would be acceptable to establish a correlation. In fact, in most sociology and psychology and things where you're studying human behavior, you're talking about if you have something like a 0.3 or 0.4, it's considered a good, strong correlation. So we're looking at a 0.96, 0.97 to give you a reference point there. Nice. So yeah, again, physics, you tend to see things in the 0.9s pretty often.
Mm-hmm. Well, but that's amazing. Comparing it to social phenomenon, it's so much stronger than anything else we can really map out. Wow, that's very interesting. Cool. Yeah.
One interesting thing, I guess one interesting thing is one thing that seems to be pretty predictable over the long term, which we probably don't have time to get into, but if you look at money debasement by M2, M2 money expansion. Now, if you look at the long-term trend from like the 50s up till now, and you take sort of the average price trajectory of that, now that is an exponential trend that is a pretty high R squared as well, interestingly enough. So you can pretty reliably count on about a 7% annually compounded inflation rate over the long term for the dollar, for example, with I don't remember the exact R squared, but it's in the 0.9s as well. Mm-hmm. So, which is not a great thing if you're holding dollars.
No. Yeah. No, it's not. But you can count on the government to debase your currency. I guess that's
the point.
Yeah.
That's right.
Absolutely. Cool. Well, let's bring us some charts so people can, for the visual learners out there. So this is the 0.5 quantile power law. So explain the 0.5 to the viewers.
Yeah. So the 0.5, so quantile regression is a little bit different than, and we'll get deep into the technical details, but it's a little different than a least squares regression. It basically handles the error a little bit differently, and it treats all the data along that power law trend line as quantiles. So if I plotted, the 0.1, 0.2, 0.3, they're basically different percentiles of the data, and then it treats it as a power law. So I often go back to the 0.5 quantile power law, because it's also the same thing as saying it's the median power law. And the median is where you can divide all the data in half. It's where half the data is above it, half the data is below it. And I like to do that because at any given point, you can see where the price is, and you can see if it's living in the half of the data that's on the upper half or the lower half. And you can I like to use that as the sort of fair, quote unquote, fair value price of Bitcoin. So I've posted this one up, like a week ago. We had a nice little mini bull run and then a quote unquote crash. The crash, I posted this to illustrate that the crash really just brings us a little bit closer to the median trajectory, which is right where the price likes to live the most. But yeah, this is one way that I really like to express the power law, is the median quantile or the median power law projection.
Yeah, and I mean, what's really fascinating is that for the last almost 2 years, we've had it basically hugging the line, right? And what happened 2 years ago in January 24, the ETFs were launched. So do you think that has any effect on changing the behavior of the power law? Is it making it hug the power law closer, the ETFs and institutional adoption?
Yeah, I think it definitely does play a factor. It's hard. I haven't really parsed out, what percent contribution I think that has to sticking a little closer. I will say more generally, if you talk about ETFs, you talk about wealth funds, you talk about institutional adoption in general, I think that this cycle is being driven a lot more by that than in previous cycles. And I think that this is, for those who've been tracking the power law for a while, I kind of think of it in two phases. I think of that trend, the kind of the support line, which is where we're in between those bubbles. And right now we've been in our sort of along that support line, if you will, for the last, like you said, 2 or 3 years. haven't really gone into a bubble phase, but then the other phase is these bubbles. And if you do the analysis on the residuals, which is that's like the deviation from the trend line, that multiple is getting smaller and smaller each cycle, is at an exponential rate. And so every future bubble, it seems the trend will be getting a little bit smaller. And I think that this just goes to support the fact that this is being adopted and becoming a truly mature and established asset. And we're sort of in this phase right now where once this gold rush is complete, it's going to be really embedded into the system itself.
I wanted to briefly interrupt today's interview to give a big shout out to our lead sponsor, Rhino Bitcoin. Rhino is the all-in-one Bitcoin super app built by Bitcoiners for Bitcoiners. Buy or sell instantly. Send sats anywhere on the Lightning Network. Withdraw straight to cold storage. Even turn sats into gift cards or link to a Casa multisig, all within one sleek interface. And Rhino is just warming up. Soon, you'll pay bills, borrow against your Bitcoin, and save for retirement, all without leaving the app. Download Rhino at rhinobitcoin.com or tap the link in the description below. Use promo code Bitcoin News and Rhino will drop you $10 of free Bitcoin into your account today. Secure your stack with Rhino Bitcoin and enjoy the rest of the video. And so that means that diminishing returns are just par for the course. They're part of this power law, correct?
Yes, and I think it's a real thing in two ways. I am a believer. I'm an observer, I should say, of the diminishing returns. That's part of the course for the power law. So even if you took out all these bubbles, by definition, the rate of returns are dropping over time with the power law. And that's not a bad thing if you look at what kind of a time window we're working with. In fact, I don't know if you want to jump, Rob, to slide 17. I have a way to illustrate this. I posted this on Thanksgiving last year, but it still holds true. It shows the 4-year average CAGR, moving average CAGR from last year all the way into like 2096 in the future. So right now we're experiencing a roughly a 4-year average compound annual growth rate of about 40. And we're going to be beating what the S&P 500 has been doing on average for like the next 40 years. And so diminishing returns sound scary, but I mean, even a 25, 20, even 15, 16% CAGR is outstanding, and if you look at that, even with respect to something that's doing 10%, which is what S&P is doing. So it's going to be beating the returns of the S&P theoretically on this power law trajectory up until 2068. So over 40 years. So it's a nice window.
Yeah. And to put it in another perspective, I mean, by 2068, the power law has us over $10 million, right? I mean,
exactly. Yeah. Absolutely. Yeah. I think that's going to be closer to the late 2040s, if I'm remembering correctly.
Oh, yeah. So even shorter, in just 20 years instead of 40 years, we'll get to 10 million. I mean, that's to go from 100K today to 10 million in 20 years. I mean, you're pretty lucky to be a part of this if you are.
Yeah, if you're around in 2068, you've got a couple more 10x's, so you're doing over 100x, I think. Yeah, by that point.
Unbelievable. Yeah. And one more thing I'd like to bring up before we move on from this power law chart is this the 5.895. This is the magic number, right?
That's right.
Explain that a little bit more.
So that's the power to which the price is growing with respect to time. So T there is time since Genesis, right? So it's really, you can think of it as age. So the price, you can pretty much mathematically compute and be 96% confident that if you take the age of Bitcoin and you take it to the power of, this is saying 5.895 or just call it 6, that's going to be giving you that trajectory. That's the dashed line here. So that's really what's giving you the shape and the trajectory of this plot.
And did you find that number independently? Is that the common number used amongst the power law community?
Oh, yeah, good question. No, it's actually done by regression, a process called regression. So what you do is you take the basic structure of a power law. You don't actually put any numbers into it, right? And then it takes all the price data and it minimizes the error so that it finds where that basic structure, the y equals a times x to the b, fits that data the best. And then it simplifies that to give you the best fit parameters. So that's the most important parameter because it's the one that tells you what the growth trajectory is going to be. So to the 6th power. So that's pretty huge. And so that's not something that I input. In other words, that's something that the regression process finds as a result of minimizing the error.
And when you were doing this research, were there any moments in which you had an aha moment where you just had to sit back and had your mind blown?
Yes, multiple times. I think one thing, I mean, just from looking at this chart, you'll notice that, people focus on the diminishing returns, but look at just what it's accomplished in terms of orders of magnitude. An order of magnitude is a multiple of 10. So if you look at the beginning, look at 2010, you're going from 10 cents there. It's gone from 10 cents to $1 to 10. So that's 1, 2, 3, 4, 5, 6. So we're going on, seven orders of magnitude of price scaling. And so we're slated to, as you pointed out, over the next 20 years to do another 10x and then another 10x after that. And so I think one thing that stuck out to me is the order of magnitude scaling of this is completely indicative of a power law, which again you find in physics. That's in fact, if you read the book Scale by Jeffrey West, you'll find that historically people use the term power law and scaling law interchangeably. So it's something that's defined by how many 10x's it can scale, which is pretty powerful. The other thing that really made things click for me is if you make the x-axis of this log scale, it makes a perfectly straight line, such a straight line that it's hard to ignore.
Yeah, wow. And I remember seeing a chart, I think it might have been from Cena, him talking about Bitcoin doubles for every 40% of its length of it being alive. Am I getting that right? Does that make sense?
I think that's right. Yeah. I saw that too. I think that was, again, you can tie to some increased amount of its age. Some proportion of its age will equal another doubling of the price. I don't remember exactly what it was off the top of my head, but that sounds right.
Cool. Yeah. So, this is all amazing mathematical work and research, but the real power of this power law comes when you apply it to real life. And so you put together the retirement guide because you wanted to show your family just how powerful of a tool Bitcoin is and how it can help them plan for the future. So talk about creating the retirement guide, and then we can dive into the charts.
Absolutely, yeah. What gave me the idea, the inspiration for the retirement guide, what the retirement guide is, it's just a set of charts and tables that I later added in so that people could have like a single, they don't have to fuss around with calculators, which you can definitely do. They play with calculators, but it's something that's based on the power law. It's based on the math behind the power law. And it's basically a one-page, one-stop lookup tool that you can go to and take a couple of basic parameters that are most important to most people, which is how old am I, right? And what year and what year do I want to retire at? And that's pretty much it. And so then what the output is, okay, what should my target Bitcoin stack be by that target year with those assumptions? And then I made multiple of these kind of one-pagers based on what that person using this tool expects to be spending annually. So you've got it up here. This is the $100,000 a year equivalent annual spending scenarios. So somebody is going, okay, when I retire, I'm going to have the equivalent of today's $100,000 a year spending in my retirement. So that's the kind of lifestyle that I expect to have. So they'll go to this particular page. And if you're more graphically, kind of visually inclined, like I am, you can use that chart where you follow the curves, and each of those curves correspond to what your current age may be. And you'll notice I put everything from age 5, so kids in diapers, all the way to age 75, who may also be in diapers. That's my joke, diapers to diapers. And then the table at the bottom corresponds to those same values as you follow those curves. What inspired me was looking to my family and how it started to gained some traction with quote unquote orange pilling some family members. And the question was coming up, which is like, how much of this should I hold? And like, we've got some retirement plans here, and what's a simple, practical tool for us to, something that they could print out, because they like to print things out, people in my family, and laminate them, put them on bulletin boards. This is something where they could do that, and they could always come back to it and refer back to their goal by circling either a box on this diagram or circle a spot on the chart itself.
Yeah, well, I mean, it's beautiful and it's powerful as well. So let's dive into some of these numbers. Well, one thing I want to start off with is that you do take inflation into account for this, correct?
Absolutely. In fact, earlier in our discussion, we talked about that 7% average compounded inflation rate. That is built into all of this. So even the $100,000 a year that it says in bold at the top, that's taking into account that 7% figure in the future. So if you're retiring in 2040, say, then it's accounting for, so it's not absolutely $100,000 per year in 2040 that you'll start spending down. It'll be an increase of 7% on top of that $100,000, whatever that ends up being in 2040. But it'll be the equivalent in today's dollars.
That's awesome and very helpful. But if we look at the numbers down at the chart, some things become clear, right? If you wanted to retire today, no matter what your age is, you're essentially going to need 10 Bitcoin.
Yeah. So everything clusters much more tightly together in the closer you are to today. So you see, like, if it literally happens in 2025, this is the year. It just so happens that we're kind of regardless of what age you are, you're going to need to have something close to 10. And then as you go further out into the future, the differences with respect to your age end up becoming more significant. Yeah. So your observation is correct. So like if you're retiring in 2045, it matters a lot more if you're age 5 or if you're age 75. Part of the reason for that is because the way this is built is it's assuming a full spend down of the full stack by age 100. Mm-hmm. So that is one of the assumptions if you look back at the post. Yeah. And
so essentially this is also saying for the 5-year-old, if a 5-year-old had 10.96 Bitcoin today, they would never have to earn money for the rest of their life. They could just spend that down as Bitcoin accumulated price over time, and they'd be completely set for money.
That's right. That's right. Retirement in diapers. Yep. That's
pretty cool. Yeah. And so in terms of when you've shared this with people, what has been their reaction and insights that you've got from sharing it with the larger community?
Ooh, yeah. So it's been really interesting. I think it's been largely positive. I think people resonate with the simplicity of it and the approachability of it, and the fact that it is backed by math and the strong, reliable math of the power law. I think that some of the more critical side of the response has been, this isn't bullish enough. So like, a bit, but that kind of goes back to their criticisms of the power law itself, not necessarily this. So I just try to point them back to, okay, well, then you kind of have to take it up with the math of the power law, I guess. And that's fine. So some people just really are kind of skeptical of the power law, which is fine. That's all. So there's about the same amount of skepticism that would have come along with that for this retirement guide for that reason. So it's, again, like you said, there are the folks who are kind of doing the hopium Bitcoin influencing of, you can retire on 0.01, you can retire on 0.1, and without adding any sort of data or color or nuance to it, kind of say that this can all be thrown out the window. But of course, this is all driven by data. So it's been mixed, but overall, I'd say positive, and I really appreciated that. So yeah, and it gives you some realistic goals to get after, right? If we look at let's just take the middle one here, age 35. If they want to retire in 30 years, which is around normal retirement age, right? What they would need is 0.6 Bitcoin. So that's not the 0.1 that you can retire on today, but 0.6 Bitcoin, while I mean, it's still a lot of money, that is, if you are working at it for the next 30 years, putting money away towards retirement, that's achievable.
right?
I agree, and I think that that's should be one of the positive takeaways here is that if you are not looking to if you're looking to have a reasonable life where you're still having a working productive years for the next like a lot of us are for the next 20, 25, 30 years, and then go into retirement, which retirement can look like a lot of different things for people. For me, I define that more as just a point of financial security, in a sense that if you had to not work for some reason, then you could just rely on spending down your Bitcoin. But it's not an advocacy for necessarily doing that in retirement. It's a state of your financial security, I think. And so for those people that are targeting, like you said, 25, 30 years down the road, which is maybe that puts them in the 60s, this becomes an extremely achievable goal. So they can focus on building their businesses, working at their jobs, adding value to society through whatever their work it is that they're passionate about. If they have this socked away, then they're going to be able to live a very comfortable retirement.
Mm-hmm. So. Yeah. And so has retirement been a theme for you? Have you thought about retirement a bunch in your life, or has it just come up once you've done this research?
I find that it's a pretty popular discussion point and topic in the Bitcoin community in general, because everybody's kind of thinking about, well, in crypto, right, outside of Bitcoin, people are talking about like, when my XRP or, insert altcoin or S coin goes to the moon, I can retire tomorrow, right? So there's sort of like a lot of unrealistic gambling mentality related retirement talk. But then there's a lot of people who are seeing where this is going as an asset, and they're seeing, like you said, the gold rush turning into something where Bitcoin is an established institutional money, like the best money we've ever had, the best money technology. And now that's going to be something that we all have access to now. What does my future look like on that? So I just think retirement is sort of a natural thing that humans think about, if they're working, and they also have a family and they have a life that they want to live. But yeah, in my family, again, this was kicked off initially from conversations inside my own family around retirement. Not for me in particular, but it definitely got me to start thinking more about my own.
Yeah. I mean, and also along with the crypto gambling mentality, there's also the FIRE community, right? Financial independence, retire early. But they seem to have a hard time with Bitcoin for some reason. I know Trace Sellers, he tries to advocate for Bitcoin and FIRE together. But have you talked to any of the FIRE influencers or advocates for that lifestyle?
Not too much. Yeah, I don't have a problem with that as a goal if that's what retirement looks like to them. Me personally, again, I look at it as a state. I don't have a date in mind in the future where I actively want to stop working or pursuing things that I think are valuable, that I can produce for other people. For me, I don't know if FIRE would be the right way to look at it. Philosophically, I think I don't want to necessarily pick a date and plan on starting to spend down my Bitcoin stack. My sort of nominal case is that I just want to keep holding my Bitcoin for as long as I can. In fact, I want to pass as much of it on to my kids as I can, and hopefully make it a generational wealth thing, rather than I can get by. Maybe it's a personality thing. No, I haven't. Honestly, I haven't talked to enough of those other influencers to get in their mindset. But for me, I feel like there would be some anxiety that comes along with that.
Yeah, 100%.
Maybe it's just me.
Yeah, I think that the idea of retiring for retirement's sake to never
for the sake of exactly
is suicide in many ways, right? You're the human being is meant to work, is meant to labor in many ways, and to provide value for those around you. So if you just decide, okay, I've got this stack of gold, aka digital gold, Bitcoin, that I'm going to sit on for the rest of my decades here on planet Earth and not provide any value for anyone, it's a very closed off mindset, I think, and takes away the vitality of life.
Yeah, and I couldn't agree more. I mean, to be honest, that's kind of my mindset. So, and of course, there's going to be some people, I hope not too many people take me wrong when they see my retirement material that I put out, which is, again, not to encourage people to stop working at a certain date and live the FIRE lifestyle, but rather to take the years that there's a strong CAGR, which we showed earlier, work as hard as you can, stack as much as you can, and really grow the community, grow the network, run your own node, get involved. But yeah, I personally, to each their own. But I think retirement for retirement's sake is would cause anxiety for me, a person who wants to do things.
Yeah, absolutely.
But yeah.
And just on the topic of passing down your Bitcoin, one thing that we need to realize is that even though Bitcoin's well over $100,000 today, it will never be easier to get your hands on as much Bitcoin as possible as it is today, right?
That's right.
For our children in 20, 30, 40 years, when they have families of their own and are planning their retirements, the idea of stacking one Bitcoin is going to be a completely different task, right? A completely different order of magnitude or 2 orders of magnitude different. So if you're going to
100%. And just to that point, if you want to jump to slide 9, it's very relevant to the point that you just brought up, which not long after I was putting the retirement material together, I wanted to see using the power law. And these are average power law projections, right? For those who are trying to grow their stack via DCA, which I feel like is a lot of people. Of course, some people, I think a lot of people also just have socked away a lump sum and then throw it right into Bitcoin, and that's an approach too. But DCA is kind of an interesting lens to look through because it's an average over time that people are allowed to allocate into Bitcoin over a monthly or period or a weekly period. And so I wanted to your point of how difficult it's going to be to stack one Bitcoin in the future. I think this illustrates that point, which is if you are, for example, stacking let's say $200 a week, right? That's $800 a month. It would today take you, if you were to start today, it would take you about, 12, 13 years to do, to get to one Bitcoin based on the growth. And that all goes back to the, to the power of 6 growth rate of Bitcoin. Now, if you were to be somebody who can afford to sock away $2,000 a month or $500 a week, and you kind of look at the middle of the chart and you look up, you're going to be getting there a lot quicker. But I think it's going to be difficult in the future. That's what this chart is trying to illustrate. And so for most people who are sort of working an average job, have a lot of expenses, have bills to pay, maybe have a mortgage, $1,000 a week is that's a lot of money. So it's like, I don't know how realistic that is for the average person. But it's going to get more and more difficult the later you start. So I think one of the messages, back to your point, is to just start early and start stacking hard and stack early, I always say.
And do you have a take on lump sum versus DCA?
I don't. I think everybody's situation is different. I think I personally DCA a little bit, but I think it starts to be, it depends on what your expense profile looks like and what your cost of living looks like and what you've got going on in your life. I think you can plan and strategize for when you get your bonus or when you have some kind of windfall and say, every time that happens, I'm going to throw it into Bitcoin and I'm not going to care about what the price is. I think there are more advantageous points in the cycle that you can put into Bitcoin where your return will be greater. So like if you're closer to that support line versus the tops of the bubbles, your return is going to be greater. But I think in the long term, if you're a long-term low time preference thinker and hodler, I think both strategies are valid. I think it depends on the person's situation.
Yeah, the way that I think of it is usually when you first get into Bitcoin and get that conviction and your mind is opened, I think it's really important to, if you do have money sitting around, to do that lump sum, because as this chart shows, it's only going to get harder to get more and more Bitcoin as time goes on. So if you get that initial conviction and you understand what Bitcoin truly is, throw that lump sum in. And then once you've established your position, then over time start DCAing into it. And I think that that's a good way to mix that initial enthusiasm that you have when you first really grok Bitcoin. And then of course you always want to keep accumulating, whether it's through buying it or earning it or getting Bitcoin in any way you can.
I agree with that too. I mean, I will say that I understand the perspective of somebody I tend to think as long as these bubbles kind of continue, like if this cycle we're sitting around $200,000 and you had a windfall of $50,000, so you've got a quarter of a Bitcoin potentially sitting there in cash, and you're like, okay, am I going to throw this into Bitcoin when the price is 200,000 versus maybe the fair value according to Sminston's 50th percentile power law model is more like 100,000. Is it smart to lump sum all in at 200,000, or maybe do I take a quarter of that just to hedge a little bit and put a quarter of that in at the top? Let's just say it's a super cycle or it never comes down for some reason. And then the rest of that you kind of DCA on the slope down back to the sort of fair value price. Because I do think it goes through these hype cycles, which are slated to continue. I just think that they're going to be diminished each subsequent cycle. So yeah, I think there are different valid strategies, but I think for most of the time when you're not going through a bubble phase, I think people shouldn't care about the specific price that much, like you said, because they're long-term thinking.
Yeah. And so let's talk about that. Let's go into, we are about to approach Q4 2025. This is supposed to be blow off top season, right? This is what crypto traders wait every 4 years to happen. It's Christmas, where you have that retail mania. The price goes up faster than you can imagine. And I was in it in 2021, and I remember that feeling. It's just so different compared to the other 3 years that you're in Bitcoin during these cycles, because it's just every day is a new headline and you're going up tens of percent on a weekly or daily basis, and you get sort of this hubris about it. And then of course life and I guess the power law comes and brings you back down to reality. But what do you see in coming for the next 3 months as we close out 2025?
Yeah, it's a good segue. If you want to jump to slide 15, I can kind of use this as a visual aid while I describe. This is my earlier work, so we're kind of working backwards through the material that I put out. But the earliest stuff that I started putting out around July last year was around something called the decay channel model. The decay channel is based on a support of the power law. So the power law is the basis of this model, and the decay channel is an attempt to bracket the tops of each of these cycles and form like a price channel, essentially. And the way that I believe the tops are most accurately modeled and projected forward based on the last 4 cycles is an exponential decay of the tops down the road, converging into that power law. So without getting too deep into the jargon, you can see in linear axes here how it forms a channel, right? So you've got the dashed white line, and then you've got the solid blue line underneath. So that represents the tops, and then the support line on the bottom. And so for several months now, as long as the decay channel has been around, the top model, the dashed lines are not aiming to predict when the top is going to be. It's predicting when the top happens, what's the most likely price that it's going to hit, assuming we know what month, which I don't claim to know the exact month. But if we say it's going to happen in December, let's just say it happens in December of this year, I believe that we get into the 200 realm. So I think it's probably going to be between 200,000 and the most likely window is like 200,000 and like 210,000, somewhere in that range. Now, I don't know if it's going to happen in December. I don't necessarily think the top is going to happen sooner than December. And I have a post coming out. I was going to do it today to explain why I think that is. I think we need at least 3 months from now for us to be able to have enough time for us to see a rise to the top based on historical cycles. Now, it might actually happen in early 2026. And if that happens, I think the potential there is to get closer into the 220s, 230s. And I think this is pretty conservative. I think there's, of course, a chance we could hit 250. But that's sort of my expectation. So thinking around December to say February target zone, something like 200 to 230 is kind of what I'm expecting. But I think that there's noise and there's error in the top models. They're not nearly as reliable as the support model, which is based on the power law.
And you hadn't done any of this work during the last blow off top, right? Back in 2021.
No, I wasn't around. I mean, I really got involved in Bitcoin on the down slope from the last cycle top. It's really when I started to become a true Bitcoiner, I'd say. So
cool. So like what signs do you think we'll see once we get into this red zone of the oscillator above 80? And do you think that people should take this into account and that they should take some off the table if we do get above 85, 90, 95?
Oh my gosh. Yeah, I can't recommend doing that, taking things off the table. I don't feel comfortable advocating for that. I will admit I've thought about strategies around that to see, you really do a gut check and see how much do I really believe in these top models. I just think at the end of the day, if I'm being really honest, I think that 4, even 5 data points, 3 data points is just, it's barely enough to make a triangle or a line. 4 data points, if there's a correlation there, okay, but it's still only 4 data points. If this thing holds up and we hit 100 on this oscillator chart, and we hit the price according to these top models, the top zone, okay, that's pretty compelling that we're following now you have to, I would say, increase your confidence that there's a specific exponential downtrend in the tops against the power law bottoms. So I wouldn't recommend taking money off the table. I don't like selling my Bitcoin for fiat. It makes me uncomfortable. I was going the opposite direction, but I would maybe use this as a guide to see how far we are from the power law. To say, again, like your example, if we have that lump sum sitting around, we're ready to throw it into Bitcoin, maybe think about splitting it up and DCAing a little bit versus throwing it all 100% in. Because then you're just going to be really bummed out when it crashes from 200,000 down to 100,000 or 90,000. I think it's just emotionally going to be very hard.
Yeah. Do you see the crashes diminishing as well? Because it's been historically between 80 and 75% the last 3 or 4, right? The major drawdowns. Do you see that lessening?
Absolutely. Well, by definition, if the tops are diminishing the way that they are, then the bottoms also have to be diminishing, assuming that the power law support line keeps holding up. So I don't expect us to. So if we kept having the exact same 70 to 80% drawdowns going forward, in perpetuity, then what that would have to mean is that you start breaking down below the power law support line. I don't think that that's happening. Therefore, I think the drawdowns as well as the peaks are both going to be diminishing in magnitude.
So if we hit that 210 level within the next 4 months or so, what would a drawdown from there look like based off your work?
Yeah, there are a few different. Okay, so the support line here I'm showing as the 5th percentile. So in all of Bitcoin's history, only 5% of the data has dropped below. In fact, you can see at the end of 2022, it just nicks below. It just drops below, but only for maybe a couple months or so, and then it comes back up. And then again, very briefly in the later half of 2023, just very briefly. So assuming the same thing happens, which has happened every time, and we start to trend along that lower support line again, and assuming we hit a peak at the end of this year, maybe January, what I would sort of expect, again, with some error, I would expect it to maybe take up close to a year for the air to be taken out of the balloon, so to speak, which if you look at 2018 to 2019, it took about a year for that to sort of diminish and hit the support line again. Again, from 2022 to 2023, took about a year. Could take longer, could take a little less. But if that happens, I'd say nominally we'd hit somewhere around 100,000. It's possible. If it takes longer to hit that peak, we might bottom out a little higher than that. It might be 120,000. Mm-hmm. It's also possible that if this happens in December and it happens a little quicker, we could drop down as low as 80 to 90,000. So people just kind of have to be a little prepared for that.
Yeah, I can just imagine Bitcoin Twitter now. If 15 months from now we're at 80K, that would be. It'd be. I agree.
It's still a roller coaster. It seems to be a fairly predictable roller coaster. So if you can accept emotionally before it happens the fact that, okay, it's probably going to come back to, let's just say 100,000 plus or minus 20 to 30,000 in a couple years, you're just going to have to stomach that now so that you expect it, so you're not caught off guard. But then be encouraged by the fact that over the year following that, you're going to be rising up to, 130. The 2 years after that, it'll be going up to 170, 180. And then if it starts climbing up a bubble phase again, then you're talking about getting up into the, threes, fours, 500,000s. And then I think the cycle after that is slated to go up to 1 million. So it's all about low time preference.
Exactly.
But you have to be careful, I think, with financial planning to account for those drawdowns still. So, by the way, the retirement, I should have mentioned this earlier, the retirement guide actually uses the 5th percentile for the modeling, not the 50th percentile. That's important because that means it's using this blue line, not the line that would split these two, this channel in half. Mm-hmm. So you see why that's important is because it's projecting that on the floor model, not on the prices that would still allow a crash back down.
Yeah.
So I think it's still allowing for some conservative planning there.
Yeah, it's basing the projections off of the worst of times rather than
the worst of times.
Yes.
Yep.
And in doing all this work and examining Bitcoin, does it seem inevitable to you once you have the math to back it up like this?
Oh, yeah. I think that defining what money is to your initial question and understanding that Bitcoin has these properties in spades, the best that we've ever seen, understanding the protocol, the underlying physics. I think seeing the math behind this and the data and how strongly it ties back to the protocol and the physics, I think, makes this seem totally inevitable to me. So I think that there are a few potential failure points of Bitcoin. I don't want to be too naive and say that it's with 100% certainty, but I have more confidence in this system, I think, than I do, for example, the propping up of the fiat system for too much longer. I'll say that. So yeah. That's good enough for me.
Absolutely. And so one thing I like about your work is that it takes that long-term perspective. So if you were talking to a young man, a kid, an 18-year-old who's just figuring out all this Bitcoin stuff, what advice would you have for them over their next 10, 20, 30-year journey with Bitcoin?
Yeah, man. Okay, a young man, I would say spend out. I know, people in their in that at that age group, if they're doing things right, should be busy, right? They should be building their skill sets. They should be networking. They should be working hard. They should be building their character, as a person. When it comes to Bitcoin, if they're not ready to start stacking early and stack hard now, then I would encourage them to start learning about Bitcoin. I would say study some math, study power laws. Try to see if you can get that clicking point the same way that I did, if they're mathematically and sort of rationally minded. Not everybody's built that way. If not, then study the history of money, study the properties of money. Think about, before I started revisiting this stuff in 2021, I don't know that I'd ever asked myself what money was, which was the first question you asked. So I would say to that person, what is money? What is money to you? What makes better money? And then what do you want your future to look like? Ask yourself some of these deep questions, and then put in the hours. Start with putting in 10 hours of learning at a very surface level. What is Bitcoin? How did it start? What's the story? And then get to that 100-hour of research mark so that you can understand probably more than 99% of the people out there about what Bitcoin's all about. Put in the 100 hours, and then see if that's not dragging your pocketbook along with you to say I should be allocating some percentage of my savings to Bitcoin as a saving technology. I don't know what's going to make it click, but I would just say be open to it. Start spending time researching it. If you're mathematically inclined, study the math. And other than that, stay stoic and don't worry too much about it. Once you've gotten to a deep enough level of understanding of Bitcoin, work hard, work on the things that are important to you. For me, it's family. It's making technology. It's a lot of basic things in life for me. So find out what those basic values are in your life, and then establish a savings program in Bitcoin in the background, and then, just stay the course, remain steady.
Absolutely. Yeah. 2 words, study Bitcoin. And I think that
study Bitcoin.
Your work is adding to the field and making it easier for both new people and advanced to really understand this stuff and show that Bitcoin seems to be marching to the beat of its own drum, and that it is reliable. And despite all the headlines and crazy things that happen on a day-to-day basis, Bitcoin is probably here to stay. So, Smitty, that's been a really awesome
Couldn't agree more.
Really awesome time chatting with you. If people want to find out more about your work, where should they go?
Thank you, Rob. Thanks for the kind words. Also, follow Bitcoin News, which a lot of people already are. I see. If you want to follow me, I only have a presence on X right now. So it's at Sminston_with on X. People on these shows call me Smitty because it's easier to pronounce. And I will soon, I've been promising my followers a website with my charts and insights and other kinds of goodies to be brought online. I was originally planning July, now it's September, so stick with me, be patient. I will soon have a sminstonwith.com website up soon. But for now, I'm on X.
Nice. Looking forward to it. All right, Smitty. Great chatting with you, and until next time.
Likewise, Rob. Thanks again. Look forward to it. Take care.
Thanks for making it to the end of the video. If you could drop a like and a share, it would help in our mission to accelerate adoption. If you're looking for more Bitcoin signal, join over 10,000 readers of our newsletter, Bitcoin News Weekly. Every Monday morning, we send out the biggest headlines of Bitcoin to keep you in the know in under 5 minutes. Links below in the description. Then come hang with us live every Monday at 11 a.m. Eastern. We break it all down live on stream with a new guest, and you can add your 2 sats in the chat. See you next week.